A stronger dollar this year has, to put it mildly, battered several currencies right across sub-Saharan Africa. The rand, the naira over in West Africa, the Kenyan shilling, everyone's been hit. And it has also forced central banks across Africa to respond to the combination of liquidity curbs and very aggressive rate hikes as well. In Kenya's case, the policy rate has risen by 300 basis points in 2 months to 11.5%. The shilling has stabilized for now between the 100 and 102 shillings to the dollar range, but only just, with a potential rate hike by the Fed in September, as you just heard, making the local unit's position tenuous at best. Ahead of the next policy meeting on the 5th of August, I spoke to Aly Khan Satchu, CEO of Rich Management, about his assessment of Kenya's monetary policy so far.
It's really trying to squeeze the shorts until the pips squeak. I think it's been pretty effective. It sort of stabilized the shilling below 104, where we were very close to a few sessions ago. We're now at around 102.40. But essentially, it's being used as a monetary policy tool to dissuade people from shorting the shilling or taking positions against it.
Indeed. I know when the July 7th MPC meeting ended, there were plenty of people who were very critical of the additional rate hike, because now that is essentially 300 basis points in the span of 2 months. Do you expect further action, especially on the rate side, in the August 5th meeting?
No, I think, the central bank governor made a number of important statements recently, where he said that external forces were buffeting the shilling, over which he had little control. And I think, he's done enough to establish his bona fides as an inflation-busting central banker. But beyond this level, I think the domestic economy will come under severe pressure. It will already come under pressure from this 300 basis point hike. And I think he's going to hold back. We're in an environment of a strong dollar. The dollar's grinding every other currency into the dust. Higher interest rates are not helping this, because the dollar move is such a big cyclical move. So I think, listening to what the central bank has said, I think he's going to stop for now and see how things move from here.
Indeed. What about the fiscal side? I know Governor Njoroge has been making some interesting comments on that front as well, because he said fairly point blank, look, the fiscal side of things definitely needs to get its house in order. What do you make of those comments? I
think he's absolutely on the money. I think, the part of the problem, that the shilling weakness is entirely driven by the fiscal side. Indeed. We're spending too much money at a time when people don't want to fund our overdraft like they did last year. It's becoming more and more expensive anywhere you are in sub-Saharan Africa, and it's that which is putting pressure on our currencies.
From the perspective of a trader, an active participant in the market, when the central bank governor comes out and actually criticizes fiscal policy, because this never happened under his predecessor, Njuguna Ndungu, I mean, this does add to his credibility, doesn't it?
Absolutely. Highly credible, excellent at signaling to the markets, turned down a Muthaiga house, has taken a very ascetic approach to his job, and really, I think, is a lodestar in terms of where, we might expect public servants to go. So I'm a great admirer of his, and I think he's talking straight. And I think actually part of the recent stability in the shilling is because people have taken him at his word.
Indeed. Let's move on to the bond side of things. In October last year, the sovereign bond spread, especially for African sovereign issuers, was somewhere in the region of 300, 450 or so basis points. Since then, of course, 9 months have passed, and now we're looking at a rate hike perhaps in September. What's changed? What's the market for African sovereign bonds like at the moment?
We've seen a massive parallel shift higher in interest rates. The market, Zambia was the latest issuer to come to the market last week. They borrowed 10-year money with a 9% handle. Last year, only Ghana, in the depth of the crisis, before Madame Lagarde came and rescued them, was trading at those kinds of rates. African Eurobonds were flavor of the year last year. It was a banner year, but this year it's all changed. Post-Greece, markets have become more nervous. They're not hunting for yield. They want to protect their principal, and there's been a definite repricing of sub-Saharan African credit.